In the first half of 2021, we saw a surge in demand from millennials starting families and planning to buy a home. We know that millions of millennials were looking to buy a home starting next year in 2022 all the way to 2025, but they decided to make their move a little earlier than their original home buying timeline and started the process this year. I mean, with interest rates as low as they are, could you blame them? On top of that, the rental market increased rental prices more than the housing market did in equity. The demand for rental property and lack of rental inventory also helped prompt these home buyers to start the search faster when they did the math and realized it was way more affordable to actually purchase a home than it was to rent. Again, that's if they can get into a house because of the inventory shortage. This also happened during what is typically the hottest season for home buying in general, so it made the surge a little more obvious. Heading into the fall, we usually see prices drop and the market slow down a bit, but it hasn't been the case. Buyers are disappointed to see that while prices have stabilized a bit, there are still multiple offers on homes and still they're going above asking. Wise sellers are pricing the homes competitively to drive more buyers to submit offers, while we've seen other sellers overprice their homes only to see it stay stagnant in this market and have to drop their prices until they do in fact get an offer. By then, buyers think there's something wrong with the home when it's been on the market for over 3 weeks. So they actually have more leverage as a buyer to be able to make a more competitive offer. Now, in the OVIEDO market, a home doesn't last longer than 7 days on the market. While the enthusiasm of those who have been shopping for a new home a while might fade, and we've definitely experienced buyer fatigue in this market, there are still tons of new buyers that are entering the market with down payments and closing costs ready to compete. I've spoken to many prospective buyers that are waiting for a dip or a drop in the market, and while I'm hopeful for them, the interest rates will go up if market prices dip. And if that's the case, home buyers will be spending more for a home due to the higher interest rate than locking into a home a little bit of a higher price with a lower interest rate that's available right now. The market shift people are waiting for isn't what they think. Instead of a surge in prices, we're going to see a stabilization of prices. Inventory isn't coming quick enough through new construction, and the people who do own houses don't want to move unless they absolutely have to. That has placed us where we are now with low inventory, high demand, but the benefit of a low interest rate that continues to be the light at the end of the search for home buyers. We don't anticipate a full switch in the housing market until sometime in 2022, where it could be considered favoring buyers, but even if that's the case, it doesn't guarantee locking in a low interest rate. Most of us real estate professionals consistently predict the same thing. If the market softens next year, it's just stabilizing, not dropping. We're going to be in recovery mode for many years, and until new construction and inventory opportunities open up in high demand markets, it's really not going to change too drastically. It is good to point out that while most major cities and suburban markets, especially in Texas, Florida, and Tennessee, have seen significant price appreciation due to COVID and relocations, some other major cities have had serious issues trying to sell, like New York. But people are slowly making their way back to the Big Apple. While real estate market has largely been hot across the entire U.S., local market conditions vary and will continue to do so. So if you're planning to buy or sell a property this year, give me a call so we can let you know exactly what's going on at a hyper-local level.